Hello, everyone. This is Matthew Frailey, founder of BreakpointTrades.com. First off, I hope everyone has had a wonderful weekend. It is Sunday, May 5th in the afternoon, and this is my extensive technical analysis review of the markets, commodities, precious metals, various trading systems, and we'll also go over some trade ideas. Again, it's Sunday, May 5th. These weekend newsletters tend to be very comprehensive, guys, anywhere from 40 to 50 minutes. So they're not dumbed down for the, you know, TikTokers who have short attention spans. It's for people who really like to dive into charts, like to nerd out. Anyway, market is at an inflection point here. We've had a nice rally off the recent lows, as you know. Here's a couple charts of the S&P 500. Here's our KISS system on the left, which exited a few weeks back. It is still in cash, or actually it went back long on Friday. But notice here, there's the 50-day moving average prices right here, and you have the ATR trailing stop just above it, 5170. Those are big resistance areas. On the normal cash chart here on the right, you can see we've had initial three-wave move up into late April, then we had a pullback, deep pullback at a higher low, and now we're moving up. This is either a bearish wave C that's going to form a lower high up here at resistance, or it's a more bullish wave 3 that will eventually take us to new highs. Again, we're nearing a major inflection here because we're right at the 61.8 fib here on the S&P. We're pretty close to it. Above that, we have a big open gap here from April. That could be a magnet. We have a downtrend line from the highs, and we have the, beyond the 61.8 fib, we have the 76.4 and 78.6 fibs right at 5191, 5200 approximately. So if price can get above those areas, then likely we go to new highs. But again, this is an area where if the market does want to flip back to the downside, it will do so. Okay, that's what the markets tend to do. They like to go up far enough where you're convinced now that the lows are in. So we'll see, guys. Major inflection point this week. We'll get back to that. But again, my name is Matthew Frailey. I founded Breakpoint Trades back in 2003, 21 years ago, to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, such as our 21 SPY and ES mean reversion systems, which had some amazing trades recently, and of course our amazing KISS systems located in the systems section, KISS STS tables. Anyway, let's go and get back to this video at hand. I'm going to go ahead and get the standard recorder started for our standard web page format for our subscribers. Remember, we have a website, breakpointtrades.com, where we put out 5 newsletters per week. Tons of trade ideas, analysis. We have a community. We send email trade notifications for our systems. If you're just watching on YouTube, you should consider subscribing. Okay, let's get started here. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. First off, hope everyone had a nice weekend so far. It is Sunday afternoon, about 4 p.m. Eastern Standard Time, May 5th. This is the extensive weekend newsletter where we cover pretty much all the markets. These weekend newsletters, as you know, tend to be quite comprehensive. Sometimes 100 charts, anywhere from 40 minutes to almost an hour. So they're quite comprehensive, much more so than the intra-week. Okay. As you can see by the table of contents, this newsletter is divided into 5 major sections. By the way, I added quite a few new trade setups here. Most of these are longs. There is a short or two here, but in case the market does take out those key resistance areas, I wanted to add some longs. So here you go. Again, we're going to cover everything from the general markets, major indexes on a top-down fashion. We're also going to look at some of the recent big cap tech earnings like Apple and Meta, stuff like that. We'll move on to a couple of our key indicators. We'll look at some major sectors. We're going to review a handful of those. We'll also look at some emerging markets in China. They've been leading. We'll look at the US dollar, Bitcoin, cryptocurrencies, stocks, commodities, precious metals, GDX, and of course our trade ideas. Again, like I said, nice bounce in the market off those recent lows, but it's at a major inflection point, guys. We're near a major inflection point. Okay, so on the S&P 500, for example, we have the 50-day moving average right here. We have the ATR, which is right around the 5190 area. 61.8% fib on the S&P and Qs, 76.4 fib, 78.6 fib on the S&P, up there around 5190 to 5200. And of course, there's an open gap. So those are some of the key areas where price could test and still ultimately form a lower high, come back down. Now, if we break through those big areas, then likely we go to new highs. I will say we are nearing we're in May now, the typical sell in May and go away. So this is the time of year where the market typically is not as strong. And I'm going to do an update again on, it's been a while, on the May and go away statistics. They're actually pretty powerful. But anyway, lots of things here. As far as the market, like I said, we had a nice gains last week. Interesting week. We had a nice sell-off on Tuesday and Wednesday in the markets. We formed that higher low, then had a strong rebound on Thursday and Friday. And for the week, the Dow gained about 1.1%, S&P about 0.5%, NASDAQ 1.4%, the Russell gained 1.8%. The weakest sector last week was energy. Notably, XLE, OIH ETFs lost about 3.5%. We also had strong pullbacks in the US dollar and the 10-year Treasury yield, which helped the market. Like I said, we're nearing a major inflection point, which I'm going to be covering here in just a second. And we're through most of the earnings for the markets, guys. All right. But that said, there's two major bond auctions this week. I think it's Wednesday and Thursday. And, most of the times I wouldn't care, but think about it, guys. Unfortunately, we're in a situation where we have this crazy amount of debt, 34, 35 trillion now. And because of that, the higher that gets, there's more chances of not having good bond auctions. So just something to consider. Next. Image number 2. Again, I already went over this in the opening video, but if you're just watching on the standard webpage newsletter. So again, the market's at an inflection point here. So the S&P on the left here, notice you have the 50-day moving average, which would close basically right at. We have the ATR above around 5170. Those are big areas, guys. Now the KISS system went back long on Friday. I'm kind of 50-50 on that, because I still see a potential for a lower high here if price can't get above those areas. All right. And the S&P 500 chart on the right here, again, I show multiple things here where the bullish view would be in green, you go to new highs. But this bearish view, you still can't rule out this potential A, B, C, because we're right below the 61 fib here. If we get above that, we have an open gap, which could be a magnet. But we have once we fill that, you have a big resistance to the downtrend line here, and you have these higher fibs up here right around the downtrend line. So pretty big levels up there. Next. Item number 3 shows the index sector table, what transpired last week. Again, nice gain on Friday, as you can see. Market reacted to that weaker jobs number. And of course, for the week, nice gains here as well. The S&P was actually up the least, up 0.5%. As far as the 21 market sectors, again, most were up. And as I already stated, notable weakness here in the energy area. That were the weakest sectors last week. Currency-wise, US dollar, big sell-off. And one thing we're going to be watching is the Japanese yen. You can see it bounce nicely. That got way oversold, kind of a crisis level. They did an intervention. I do think there's potential for this to rally more. So I'll talk about that. Cryptocurrencies, Bitcoin up a little bit here. Some of the stocks have bounced off the lows. Bitcoin last week bounced off a major support area after breaking into that one of the thin zones. And as far as commodities here, for the week, the index was down 2.3% DBC. Again, strongly because of crude oil down 6.8%, gasoline down 6.9%. Agriculture finally got nailed, down 8%. That's a big move, guys. All right. Natural gas, though, up 11.4%. Big move down in coffee. So kind of a mixed bag here in the commodities, mainly weakness in the energy area. But again, some strong weakness there in agriculture, too. One area that looks pretty good, it's not on here, is uranium. It's in a big coil. We'll go over that. As far as the precious metals, they were down for the week. Gold down 1.7%. Silver down 2.7%. GDX, the miners, down 3.3%. Remember, we called some sort of trade high several weeks ago in the metals, and so far that's played out. And as far as the bond market, nice sell-offs last week in the 10-year and the 30-year Treasury yields. Next, item number 4 shows the economic news calendar. As I stated, really not a lot of news here on the docket, and we've reported most of the earnings. That said, like I said, there's a couple of major bond auctions this week, and we obviously have to watch those because of the amount of debt we're now in. All right, let's go ahead and move on. Start with some charts. So first off, let's go over some of the recent big cap tech stocks that had earnings. So here's Apple. Apple reported on Thursday. It was in this downtrend channel, and they beat. Big old gap up. Now it's a black candle. Price opened above the 61.8 fib there, sold off. But again, big gap over the downtrend line. They also announced a big buyback, stuff like that. By the way, the high of this gap, black candle on Friday, notice right around 187, there was an open gap there in February. You see that? That was a magnet. Those open gaps are always magnets, and we filled that. Chart number 6, here's Amazon. Amazon, as you know, bounced off that big support area, and it continues moving up after earnings. It is now testing this extended trend line. We'll see if it pauses there or can power through it. Chart number 7, Google. Google's been very strong. One of the stronger FANG stocks, quite honestly, lately. Chart number 8, here's Meta. As you know, Meta got absolutely nailed on their earnings over a week ago. Didn't quite fill that gap on the cash. It did in after hours, but bouncing back a little bit here, but otherwise that chart's quite weak. Chart number 9, here's Microsoft. And notable, Microsoft, the previous 2 weeks ago, had earnings. It went up a little bit, but then it reversed. Now it's trying to recover here a bit, but definitely some weakness there. Chart number 10, here's AMD. Now AMD is interesting. They had earnings. You have the 200-day moving average down here, which I would have felt better if we tagged that, and it still may. I took a shot long there. You got a demand zone, 200-day moving average here. You have some divergence here you see on the RSI, a little bit on the MACD. So this seemed like a low risk long. If you thought the market might go back to new highs, just put a stop right around there. One that really got nailed is Starbucks. Look at this, down 17.2% for the week. There's a big support zone in here. We'll see if that can hold or not. But quite honestly, look at the monthly chart on Starbucks. This is a linear chart. Now this goes back to 2008. You can see, you could draw an uptrend line from the 2009 lows, and comes in down around the low 60s. You also have sort of a slanted head and shoulder look to it here. This does not look pretty, guys, at all. All right, let's go ahead and move on to the index charts. First chart below, item number 13, here's the Dow. Don't discuss this too often. It's only 30 stocks. Up 1.1% for the week. Again, still a lower high in place where it's now back testing the underside of the 9 EMA. If the market does form a lower high and go back down again, I think this previous resistance around 37,000 will now be tested as support if we go back down. Chart number 14, here's the daily. Again, you can see we bounced off those lows, running right into the 50-day moving average there. The highs had a really obvious MACD divergence there, which played out. But we'll see if this forms a lower high or not. I could certainly see it happening. A lot of work to do. Moving on to the S&P 500 charts, our proxy. Here's the weekly view of the S&P. Again, up about 0.5% for the week. And this is the chart I had on the previous week. Nothing's changed. Like I said, that initial move down could be the bearish view would be that was a wave A. We're going to form a lower high, wave B bounce. We go down again in wave C to a bigger support area. Then we have a bigger rally sometime in the later summer. Or we just go back to the highs in green. Which one do I favor? Honestly, it's really hard to say. I'm kind of leaning to a lower high here and where we go down again, but we'll see. Next, number 16, here's the weekly KISS system. So, on our website, we have our daily KISS systems, but we also have the weekly, guys. And you can see on the weekly, price did bounce a couple weeks ago, bounced off the weekly ATR supports. And where the smart trailing stops happen to be in the S&P 4909, 405.90 on the Qs, the Dow 375.30, etc. So we did bounce off those important areas. Next, chart number 17, here's the monthly view of the S&P. So far for the month, up 1.8%. Again, it's early in the month. Again, we're still in this long-term uptrend channel for the 2009 lows. Ultimately, we'll see where this goes, see if this ends up forming a lower high in the MACD over time, like a big divergence. I could see that potentially happening. Maybe we make a new high later this year. Maybe we get near the upper portion of the channel if things really go well, and maybe that's an area to top out. Next, moving down to the lower time frames, chart number 18, here's the daily. So again, so far we have essentially three waves here. We have wave one up, a higher low, and we're moving up again late last week. Here, the dotted line represents symmetry. So if you had a perfect one-to-one symmetry, move off the 49.53 low to the highs there in late April. So if you add it to the 50.11 lows, that comes in just over the 61.8 fib. Comes in right around this 51, 70, 80 area, right? Otherwise, 76.4% fibs up here around 5,200. That's a big area as well. So again, these are big inflection points up here, guys. Next, chart number 19, here's a 2-hour time frame. So first off, again, you had your first ABC move up to 51.23. Then we had that deep retracement, higher low, right? Now we've been moving up again. So this could either be a wave C or it's a more bearish wave 3. Again, I wouldn't be surprised if we go up a little more though, at least tag the 61.8 fib and maybe even get into this open gap. Notice there's a downtrend line here. 78.6 fib is 51.99. Now again, above these areas, but above the downtrend line, above that fib, then I mean new highs are probably basically inevitable. But again, that's still potential areas where the market could fake the bulls out. Right now, the bulls have the football in the short term, using a football analogy, but that's an area where they could fumble it and flip up a lot of the public. Next, chart number 20, here's another 2-hour view. This shows you that potential wave count breakdown. We don't like to get in these wave counts too much because folks like to hyper focus on them. There's always multiple things. So here's the couple different scenarios I see. A, B, C of A you had up, higher low wave B, we're moving up in this wave C. For now, I'm kind of favoring that, right? But again, it could also be a more bullish 1, 2, 1, 2, and we're going up in 3. But again, for wave 3s are your strongest move. This needs to keep going. Okay, wave 3s are strong. You started off well here, but it needs to keep going. It needs to clear out these big areas. Chart number 21, here's a 60-minute chart. Again, shows you the same thing essentially. Here added like a channel. That's an area to watch as well. If you get above that, like I said, you have the open gap and some of these fibs up here. Next, chart number 22, here's a daily view of the S&P. Again, this shows you the two options. We either get the lower high wave B, come down, or we go, we're maybe come down around the 200-day moving average into the demand zone. Then we form a major low. I would personally love that option. To me, that would be a much easier place to really load the boat long. But again, going to new highs is also an option here as well. Next, image number 23. Here's the daily KISS system for the S&P 500. Remember, this one in cash a couple weeks ago had a great trade. It went back long on Friday. Not my ideal spot. Now it's hard to see here, this small red, that's the 50-day moving average. We closed right there. The bigger resistance is that ATR above. So that's an area where possibly could stall. So watch that. Those are big levels. Like I said, the onus is on the bulls to get through those areas. Otherwise, again, the system went back long. The stop is essentially at that higher low, swing low. A couple of people asked me, well, should I follow the system or not? That's up to you guys. One option, if you're a little more nervous on this long here, is you go long 50% instead of the full 100% allocation to the S&P. Okay. Again, that's what makes trading trading. You never know exactly what's going to happen. But and again, we just had a big closed out a big long winning trade. And sometimes after a big long winning trade, like you see back here last year, then you have a whipsaw. So there is higher odds at a whipsaw here just because we just recently come off a big trade. Next. Chart 24, here's the 4 time frames, the daily up here on the left. Again, the ATR above is a big thing to watch. On the half day, we bounced off the ATR. Okay, that became support. Notice the 60 stochastic here, this 50% area was resistance last time, and we're testing it again. So an inflection here. Of course, we bounced off the ATR in the lower time frames last week. Chart 25, here's a half day chart with some fibs, again, showing you the same thing as the other charts. One couple things I want to mention, guys. The inverse ETFs, which had that initial move up in April, they still look okay on this pullback. Here's the SPXU, that's the triple inverse ETF for the S&P. Again, you can see how it still has the potential where it could form a higher low here if it wanted to, and you have the moving averages pinching. So that's why I'm keeping it on here as something to monitor. Or a hedge if you need it. Here's the SQQQ. You have the same thing. The bullish view would simply be that it has an ABC pullback. It's going to form a higher low and rally again. Again, that would happen if that lower high wave B scenario plays out that I've been discussing above. Next, chart 28, here's the triple Qs. Remember, they broke down from that coil several weeks ago. Nice move down. Right now, just like on the S&P, you have 3 waves up. Right at the 50-day moving average, that's a resistance. There's a big resistance zone right here. Here's would be a 1-to-1 symmetry. Chart 29, here's the weekly nested 1-2, 1-2 we've been showing where, this would have us in this bigger wave 4. We're going to ultimately form a lower high here, but we'll see. This is an option I've been showing since actually last fall, which has been playing out very well. Next, chart 30, here's the daily KISS system for the Qs. Again, this also went back long on Friday, just like on the S&P. Trailing stop is right there. It's either going to be a winner or it's not. Price closing right underside this ATR, which is a big level. Let's see what this does earlier this week. I think, again, guys, market's going to decide what it's going to do sometime this week. Notice the last time in the fall, we had that whipsaw right after that big winning trade. Then the next trade, of course, in late October was a monster winner. So we'll see if that ends up being a whipsaw or not. Chart 31, here's the 4 time frames. Again, very similar to the S&P, pretty much identical. Let's go ahead and move on. Chart 32, here's the triple Qs, 2-hour time frame. Again, you can see this, first off, this perfect ABC symmetry up to that 433.76 high. Higher low, we're up again. And this is your big resistance zone, all into here. You have the 200-day moving average here, but really all the way up to this 442 area. One thing I didn't add here is a downtrend line, and you could also add that. Let me open this. All right, so like I said, I didn't put it on the chart, but you could also draw a downtrend line right here. So this is a big, big area coming up right into there. Next, chart 33, here's a 60-minute chart. We gapped out of the coil last week. Again, get that big resistance zone above. Next, final index, here's the IWM small caps, up 1.8% for the week. Remember, over a month ago, price stalled to that supply zone. Obviously, we had a big double bottom low late last year on just a perfect support there. Chart 35, here's the daily IWM. Remember, we had that textbook rising wedge, 5-wave pattern, A, B, C, D, E, MACD divergence. True wedges always have MACD divergence, guys. If you don't have MACD divergence and you drew a wedge, more than likely your wedge is not complete, okay? Anyway, so that's a pro tip. IWM bounced off that demand zone near the 200-day moving average. Again, just like the others, you have 3 waves up so far only. So far, price stalling around the 61.8 fib. Another option I'm looking at could be a right shoulder of a head and shoulder that could form. So to me, this looks definitely a little more precarious than the other indexes, but we'll see. Jobber 36, here's the 2-hour time frame. Again, remember we had bounced off that support zone. There is an open gap here, which we got into last week. Didn't quite fill it. Goes up to about 205. So there you go on the indexes, guys. Like I said, big inflection point this week. We'll see if we form a lower high or we can get through those areas. Next, looking at some of these indicators, here's the VIX. The VIX, of course, has been smashed back down. Now, the lower Bollinger Bands on the VIX are pointing down. This is going to be very difficult to close back below its lower Bollinger Bands without some sort of little pullback in the market, but just because the lower Bollinger Bands are going down here. And next, Jobber 38, here's the SPXY with the S&P. SPXY is in black, S&P is in green. I show this because SPXY has been leading pretty well. It's been a leading indicator. See, it started bouncing here before the S&P, and it's been going up further than the S&P, so maybe that's a positive. Next, Jobber 39, here's that NYA chart with the breadth thrust indicator. Again, we have not had a breadth thrust, but what I want to show is I showed a few weeks back that this was in the oversold territory for a mean reversion, and this has obviously played out well. Now, since that time, it's been working its way back up. Next, Jobber 40, here's the percentage of stocks in the S&P 500 that are above their 20-day moving average. This was also in firmly oversold territory in mid-April, as you can see, got down to around 7.5%, and it's bounced up. About midway up now in the 50% range. Jobber 41, here's our NYSI 9 EMA crossover system. Remember, this gave an excellent short signal back there in early February when it crossed below the 9 EMA and confirmed. On Friday, this finally crossed back above its 9 EMA, but if you want a confirmation, you need a close above Friday's high. That's why I drew the green line there. So we'll see if we get that confirmation or not. Next, Jobber 42, here's the NYSI indicator, summation index with the 5-3 stochastic overlay. And one positive is this has worked its way to oversold and is curling back up. Another thing that's kind of positive short term here is here's the S&P 500 versus high yield corporate. And the high yield corporate is basically back to the highs. It actually made a brief new high. The S&P has not. So market tends to follow high yield corporate. If you look at the April low here, when S&P had a lower low here, notice that high yield corporate had a higher low, and that was a good warning that the market was ready to bounce, which it did. Next, let's look at the bond market itself. So here's high yield corporate on the daily. Like I said, one positive is this is essentially back to the highs, and the market likes to follow it. So we'll see if that plays out. Jobber 45, here's the 10-year treasury yield. This has been selling off from the top of that channel. If this continues to break down, especially if it were to break that lower channel, 50-day moving average, that could give the market juice to go to a new highs now if it wanted to. So keep an eye on the 10-year treasury yield. Jobber 46, TLT 20-year bonds, again, complete opposite to interest rates. So you have instead of an upward channel, you have a downward channel where we bounced off of. Next, Jobber 47, here's the yield curve, the 10-year divided by the 2-year. Again, this has been inverted now for over 540 days. So it's the third or fourth longest in history. And every time it's been over 500 days, when it does go back and you have a recession event, the markets have had 40 to 50% corrections. So that's something to be aware of. Again, maybe I wouldn't be surprised if that were to play out, but maybe it's not something that plays out until late in the year. We're going to keep an eye on this. It did go up last week, but it's still negative. The important thing is when this goes back positive, that's typically when you get your official recessions. Next, let's look at a handful of these market sectors. Here's XLK Technology. Again, remember the initial sell-off in April. Filled that open gap, bounced off the 38% fib, rallied lower high, deep retracement. It's now coming back. In this broken trend line of this coil is resistance, 50-day moving average. We'll see what price does there. Jobber 49, semiconductors, same deal, rallied up into resistance, pulled back, higher low. It's coming back to retest this area. So just like on the indexes, guys, these are major inflection points. Jabber 50, here's the transports. They've had a nice haircut. Didn't quite tag its 200-day moving average, bouncing back the last couple days. Again, still below its declining 20-day moving average. Jabber 51, here's biotech. Nice bounce off this support area and 200-day moving average. I highlighted this as a low risk long over a week ago, and that's played out. 50-day moving average up here is now some resistance area to take some profits. The leverage way to play that biotech was LABU. That's the triple long ETF. Nice move. Jabber 53, here's the banks. They've been okay lately. Still look decent. Jabber 54, here's the financials. Again, higher low so far. Jabber 55, consumer staples. This actually looks pretty good. This actually looks like a bullish chart and it could easily break out again. I think this is actually defensive, so be aware of that. Jabber 56, here's healthcare. They've had a sell-off, bounce up, but for now has sort of a bear flag look to it. Jabber 57, industrials. And so far just chopping around here. Notice you have the 50, 20, and 50-day moving averages coming together. Jabber 58, real estate, bouncing back a little bit with those rates pulling back. 50-day moving averages above. Jabber 59, XLP, duplicate chart. Jabber 60, utilities, they continue to rock and roll, moving up nicely, and the utility stocks. Energy area, here's XLE. So far we have three-wave pullback. The bullish view would be this is a simple ABC. There's a little support here. Notice you got a couple dojis around the 50-day moving average. You could attempt the long with a stop right at Friday's lows if you wanted to. Jabber 62, oil services. Get a nice sell-off from resistance back in April. Bear flag that it formed, sold off. This obviously isn't as strong as XLE. Got a lot of work to do. It's below its 200-day moving average now. Crude oil has been selling off here quite strongly. Jabber 63, XOP, S&P oil and gas exploration. This has also had sort of an ABC pullback. By the way, ExxonMobil, the big one, also looks pretty identical, same pattern. Next. Jabber 64, here's the S&P versus the Chinese market. So the Chinese market has been outperforming here lately. It was, again, let's be honest, guys, it was the most washed out, oversold, bearish thing. So not surprised to see that it's doing better than our market. It was quite oversold. It's had a nice bounce lately. Jabber 65, here's the S&P versus emerging markets. You can see emerging markets made a brand new high on Thursday and Friday. So they're leading. China's been doing well. Here's yen. That's the triple long ETF for China. We had a nice bullish pattern back here in April, which broken out. We got a resistance area up here, which we're working above. We're nicely above the 200-day moving average now. And finally, Jabber 67, BABA. This is a weekly chart. This has had a hell of a haircut since the 2020 highs when it was up here in the 300s. I like this potential falling wedge on the weekly. Just starting to break out here. So if you're willing to give it a little room and you think China may have bottomed for a while, could be a lower risk swing trade here. Next, moving on to commodities, Jabber 68, DBC. Again, so far, an ABC pullback. Now, it did bounce off this broken trend line, and you also have the 50-day, 200-day moving averages right here. So that is a critical support, which we've bounced off so far. Jabber 69, there's the weekly, down 2.3%. We're in this big old coil formation. Jabber 70, there's the monthly chart. You can see this big coil that has been forming. You can also see the moving average ribbons pinching. So energy's building in this commodity zone, guys. Jabber 71, crude oil. Stalled at the supply zone back in early April. Sold off, finally lost its 50-day moving average last week, 200-day moving average, and the uptrend channel. Right now, it's at the 50% fib area. Let's see if we can find some support there or the 61.8 fib. Jabber 72, here's UNG, natural gas ETF. I've been showing this falling wedge pattern for a while with the MACD divergence. Finally broke out on Friday. Let's see if we can get some follow through. This is notoriously difficult to trade, natural gas. I own a little bit of this though. Driver 73, here's the monthly chart of natural gas. Like I said, it was a good area to look for a long. This whole area essentially has been big support going back to 1995. So definitely a low risk area to look for longs. Driver 74, copper. This is the weekly chart, down 0.37%. And it's had a nice move out of that weekly coil over the last couple months. Driver 75, here's the daily. Again, nice pullback. Bounced on Friday. There was no MACD divergence or anything at those highs. Driver 76, here's DBA, weekly chart down about 8%. That's a big old move on DBA, guys. But again, this bullish cup and handle pattern that I showed back in January played out exceptionally. Hope you guys caught it, but also hope you guys took profits, right? Big old sell-off. Now, why did it sell off so hard? Let's take a look. Here's the monthly chart. Notice the monthly, there was a big supply zone up here where price pulled right back from. A logical area to do so. Now, I do think this pullback will be a buying opportunity again, though, because long term, this isn't a bull market. Driver 78, here's the daily. Again, pretty much really good pullback. I bought a little bit of this on Thursday. It's bounced on Friday. I'm not convinced it's done here, though. You've had essentially one move down. And after one move down, maybe you get a lower high and then come down again. And that next low would be your better opportunity, especially if that 200-day moving average catches up with price. Next, driver 79, Coca. Remember, this was going parabolic. It was in the news quite a bit. You can see it formed that MACD divergence at the highs in April, and then boom, a big sell-off. Those parabolic moves like that aren't sustainable. Bouncing back a little on Friday. One area that looks good is uranium. I've been showing. Here's uranium. Nice bounce off the lower coil. So it's approaching the upper coil trend line. Driver 80, here's the weekly. Again, beautiful coil setup. And Chartbert 82, here's the monthly. Again, if this were to really rock and roll, I could see it going up to this next supply zone up in the 40s. Again, I liked it back here in 2020 off this multi-year trend line base break and the last year on the coil break. Been long-term bullish on uranium. Next, let's look at Bitcoin. Here's Bitcoin on a 4-hour time frame. So Bitcoin, remember, lost that important support the previous week, last week, but it then got down part ways. There was a demand zone here. Okay, you only really see it on the 4-hour time frame. You don't see it on the daily. So it did bounce perfectly off of that. Now, had it went into this area, you got a big thin zone here, and I think price would have just melted down to the low 50,000. So the good thing is we rallied back up. We took out a downtrend line. But again, I think Bitcoin's going to go where the market goes. If the market ultimately forms a lower high and comes all the way back down again, I think Bitcoin will as well. Driver 84, here's BITI. That's the inverse Bitcoin ETF that I put out last week. It gave you a tiny trade. It's coming back down now. Now we'll see if it can form a higher low in here or not. Again, it's going to depend on what Bitcoin does. Driver 85, looking at a couple of the stocks. Here's MSTR, bouncing the last couple of days a bit. Driver 86, here's Mara, bouncing again off that 200-day moving average. Next, Chartbert 87, US dollar weekly view down 0.84%, stalling so far in this supply zone. Chartbert 88, here's the daily view. Again, stalling at the supply zone for now, coming down. Chartbert 89, here's the Japanese, this is the euro, I'm sorry. See this kind of ascending triangle forming. So if this were to rally up, then obviously the dollar would come down. One area I'm watching is the Japanese yen. So here's the yen. It's had a nice bounce on the weekly, up 3.3%. It was quite oversold. We had some intervention there finally. It was needed. Bouncing back to this area resistance area. Chartbert 91, here's the monthly. Again, you can see the yen had fallen below the 1998 levels during that Asian currency crisis. Okay, so it was quite concerning. You can see, though, it is potentially forming a falling wedge with MACD and RSI divergence. So I do think there's potential for this to bounce up. Way to play it is the FXY. That's the follows the Japanese yen ETF. All right, moving on. Moving to precious metals, chart 93. Here's gold down 1.6%. Again, we called a high on gold several weeks ago. So far, that's been playing out. Now, this is still above its 9 EMA. Again, no MACD divergence. I do believe this will be a buying opportunity ultimately. Longer term, this is going to go much higher. But also, gold typically is weak. Seasonality, anywhere from late April until early July. So we could see weakness here for a while. Chart 94, here's the monthly. Again, long-term, guys, we broke out. So I am looking at this to go much higher over time, maybe even up to 3,000. Chart 95, here's the daily. Again, so far we have little 3 waves down. The bullish view, short term, would be this is simply a wave 4. We're going to go up again in a wave 5. The more bearish view, intermediate term, will be we have a wave C high, and we're going to be in a longer consolidation. One thing to watch is this ratio. It's still uptrending for now. Chart 96, here's GLD, that 2-hour time frame. We're on 412. We said the count looks correct because we could, at the time, we could count 5 of 5. And so far, that's been playing out. Moving to silver, chart 97, silver down 2% last week, basically retesting the broken trend line of this bullish triangle that's acting as support. Chart 98, here's SLV, essentially the same pattern, a little bit. This one you can get a little more room. This is a big support area down here. If this weakens, I'd definitely be a buyer down in this range for sure, because I think it's a good area to accumulate it. I think silver is going to go back to the $50 range over time, guys. Chart 99, here's the daily. Again, you can see so far pulling back to retest the previous resistance, turn support. I did buy a little bit of silver down there. I didn't buy all of it, just in case we're in a longer consolidation. Chart 100, here's the daily SLV, so same deal. You got a little more room down in here. This is your big support area down in here. Chart 101, silver on the monthly. Like I said, we have this big old monthly coil. This thing measures up in the upper 40s. Chart 102, there's the SLV ETF. Okay, one target would be up in here in the 31 to 34 range. Be a pretty good, decent percentage move. Holding silver on the long term, SLV is your best bet. I wouldn't hold AGQ, a leveraged ETF, long term because it degrades. Next, looking at the stocks, GDX down 3.3%. That's the miners. Again, that's fine. Pulling back here, we're consolidating. Longer term resistance is this downtrend line on the weekly. Chart 104, here's GDX on the daily. So far, we're still in this channel. Ratio still holding. We'll see if this can break out for one more time or not, but it's still in the pattern. Chart 105, here's the 60-minute GDX. You can see the same channel. Also, you have a tight coil in the channel. That's likely to resolve probably on Monday. Some individual names. Here's RGLD, Royal Gold. Essentially the same pattern as GDX. Chart 107, Newmont, that's the biggest component of GDX. This is the weekly chart. Remember, this found big support on the weekly support back in February. Broke its downtrend line. That's now potentially support. And chart 108, AG, the silver stock. This had that very bullish falling wedge. Broke out of the wedge. Pulled back. I bought a little bit on that pullback. Again, those are just a couple options. I'm not going to go any others. And finally, guys, let's review trade ideas, setups. So some recently triggered ones. Here's chart 109, FUTU. I picked this out simply because it was a weekly, 2-year coil. It broke out the previous week, followed through last week. I own some of this. Potential target I have is up in here. Again, I know nothing about the fundamentals. If you're wanting to hold it longer term, I would suggest looking at those. But I like the chart. Chart 110, CENX, aluminum stock, was a tight coil, did provide a quick short, bouncing back a little bit now. Chart 111, TMDX, was a breakout of mine early last week, which gapped and has had a nice move. Chart 112, FE, First Star Energy, was a long idea of mine early last week, nice move. Jobber 113, Home Depot was another long idea mid last week. It gapped out of this little coil. Another one, Walmart. It's in a nice little wedge-like pattern. This is one to watch. If it could break over the downtrend line, could be a long. Here's some new setups, guys. AUR, lower price stock, but potential inverse head and shoulder here. Good volume on Friday. One target would be filling this gap up here in the fours. AVGO, that's a semiconductor stock, something to watch here as well over time. Jobber 117, BIIB, Biogen. It's in an obvious bull flag pattern here, resistance 218.90. Jobber 118, CEG, energy stock, starting to break out of a coil here on good volume. Jobber 119, Dollar General. We had it as a long back here in February out of this coil, gave a great trade up to the supply zone. See that? Where it stalled. Now prices pulled back to the 200-day moving average. This could be a low risk long with a tight stop. Jobber 120, Apollo. To me, this looks more like a short if it loses that support around 106. Jobber 121, YM. Resistance is $9 for a quick breakout. Jobber 122, NVT. Resistance is $76.55. Jobber 123, GCT. Coil forming here. Nice looking pattern. Jobber 124, CIBI. Kind of a cup and handle look. Potential ABC. Resistance is up here. Jobber 125, GPS. Little long, potential long here over the resistance trend line. Jobber 126, SILV, kind of a flag pattern. Jobber 127, SLGT. Nice move up last week. Lower price stock. You got resistance around this 205 area. And we already covered this one. Duplicate chart, GCT, nice coil. And Jobber 129, SMR. This is a 60-minute chart. You got a clean resistance over the 630. All right, guys. We'll see how futures open tonight. Actually, a quick check here. This is the weekend betting futures on IG.com. So it's showing about a 25-point open on the Dow. That's essentially flat. All right, guys. Have a wonderful rest of your Sunday afternoon. Thank you for your support at Breakpoint Trades. On the videos, please like, subscribe, comment. That helps us out. And best is to subscribe to our website, breakpointtrades.com. That's actually the best way to help us out if you're not a subscriber. Take care.